Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at what happened in the market during the day and how we can plan for a better trade for the next day. So we had a bull trap day once again at the same point where it had done 3 days back, right? So this is analysis for May 24th, pre-market analysis, Tuesday, tomorrow, 2022, and it will be based on all these parameters that you see, the technical analysis parameters, and we'll have some data analysis also and wrap up with some actionables as well, right? Let's get in the charts and see what happened today. Yes, it's clear bull trap, right? The price moved above the previous candle's high, giving an impression that the market is going to rally up, trap the bulls, and then close below the previous day's high, right? That's exactly what happened in Banknifty also, and the candle looks like an inverted hammer. Here also it looks more like an inverted hammer than a doji. Small body, both a small body, which indicates there is indecisiveness in the market. And the big wick size of the candle shows that there is selling pressure from the top on both indices, right? Exactly what happened. Remember, we have been doing zigzags. No, there's a big gap down, then a big gap up, big gap down, big gap up. That's almost like a W. So it's just a support zone, and whenever this W, along with the volatility contraction, if you put in Bollinger Bands here, right, an inside-outside formation of the pattern, volatility divergence is seen, and this, if it works out, and if it breaks above this W's neckline, it could give an equal height of move on the upside. It's possible. That would probably come somewhere near 70,000. It's a possibility we cannot rule out. But the main thing is that it's at a major support zone, although there is a swing low that is slightly below as compared to Nifty on the Banknifty that we can see. But overall, it's at a major support zone, and breach of that would clearly indicate that we may have a big fall. And it does not happen. No, it may consolidate here or move up. No, either of those possibilities are there. That's what. Remember, we have cleared one of the gaps which is formed in W formation and both indices, but remember we have a major gap here at this zone which is acting like a very good resistance right now. That's certainly happened. So if you see Banknifty here right side, 1 2 3 4 5 days it has been attempting to clear that resistance now. So that powerful is what gaps are there in the technical analysis. No, so this is what happened. The day ended flat, but it had given high hopes. And the banks are showing great strength to where 1.45%, that's 500 points of up move happened in the banks in the morning. It's 1.4% of up move from 500 points up move in the bank Nifty, but Nifty was showing some weakness, and but even that also moved almost 1%, 140 points up. But then in the afternoon at 2 o'clock it just fall down just like anything. That's trapping all the bulls. So the day ended with less than 0.5%. It's 51 points really lost in the Nifty, and Bank Nifty lost 29 points. Both of them staying almost flat, forming inverted candles. Remember that we are moving in a trend line channel, down sliding trend line channel is what we are. Right, very, very close to making a new swing low. We had already made a new swing high on the top. That's how it is. We're trying to, and so that's why I said the reach of this point where it is currently very close by the 33,000 levels, and the 650 levels is very crucial for it to sustain. Intraday price action we already discussed, right? Big, it was an up move, so you can see the prices are moving here and there. It's overall it's zigzagging. That's what is happening. So today's right price action, if you see, went up, inverted V, not a V, inverted V, moving up, trapping all the bulls, so then falling down and giving up more. Same thing happened on Banknifty also. Bollinger Bands has been clearly indicating downside expansion of volatility on both the indices. But however, the band walk has stopped and it is attempted to clear this 20 moving average, which is very crucial. And today you can also see that this is a moving average 20 where the Banknifty has taken a resistance once again. Right, so any price move above that, or a green close above this moving average would indicate that probably we are done with it. At least for a short time we are done with the downside move. Support resistances, if you see, look at this. Nothing much has happened today. If you see it from yesterday, 16,100 and 16,200, it's going to be the support first, and then 15,850, 15,950 that bridges, which is the Fibonacci 61 retracement level. And if that, then we have 15,735, which should access major support, because that's where it had taken the bounce from. And then comes the 15,650 levels, but it is a previous swing low, right? And if that bridges, we go to the 15,350, 450, and 15,000 kind of levels on the downside. Signal resistance on the upside is 16,350, 16,450, which is Fibonacci 50 retracement first to be cleared. And then above that you have the gap resistance, which would be 16,550, 16,650, and 16,700, 16,750, and above that 16,800, 16,900, Fibonacci 38 retracement levels. And above that you have the 17,000 rounding number. Banking index, it's not clear for me very much, so let me just straight away go in there and then look at and tell the levels directly there. So for the banks, that's what we are, and nothing much has changed because it is a pull trap today. The first support will be 33,600, 34,100, which is Fibonacci 61 levels. And then if that breaches, then 32,400, 32,800 is where we would end up with. And 31,800 to 32,150 is where the slippage from there would lead to. And if that also breaks, then you go back to the 30,500 to 31,000 kind of levels. Similarly, resistance on the upside. Yeah, so coming to the resistance levels of the Banknifty. Let me go back to that slide once again. So the resistance would start from 34,350 to 34,750, and then above that you have the 35,000 to 35,300 Fibonacci 650. There is a gap resistance there, and then above that you have 35,600, 35,900 levels, and then you have 36,300 to 36,800 Fibonacci 38, and then we have another resistance at 35,500 below levels, right? So that's the resistance on the upside. No, two gap resistances on the upside. Same with Banknifty also, we are already seeing that. And here we go, making all of this support resistance levels. Momentum is actually improving, alright, but today it is a slight bend that is taken. It has climbed from the bearish zones to the bullish zones in both indices. You can clearly see that. So sideways momentum for both indices and on both the time frames is what we can see. No divergences as of now. Trend still remains bearish as of now, but it's almost near to a crossover to happen both indices. You can see on the short term, and this bearishness is reduced, gradually taken a bend, and it is falling down. So that crossover could happen, and then we could be in short-term trend reversal into the bullish zones, DMI positive very soon. But as of now, it remains bearish on both the indices and both time frames of weekly and daily, right? So moving to the volatility, you have India VIX spiked slightly 1.3%, and it's 23.39 today closing. Implied volatility of Nifty is 22.24, and implied volatility percentage for a 52-week VIX still remains 89 nearby levels, right? So India VIX greater than 23 is still no worry, no, the uncertainty is still there. You have to be cautious until it cools down below 20. Often does analysis 3 days ahead of expiry. Tomorrow is Tuesday, and monthly expiry is on Thursday, 26th. So the data shows that there is some additional coal buildup, coal writing has happened today, and some coal unwinding also has happened near to the ATM levels, and then some additional put writing also has happened. But more on resistance, more coal writing is what you see in both indices. If you look at overall, no, what projects out is the bearishness as of now, right? We still have a few more days, so anything can happen. So May 26 monthly expiry, the levels are 16,000 to 17,000 for the maximum number of put and call writing, and support and resistance levels can be seen there. 15,000 and 16,800 is where the second level of highest put and call writing is seen. 34,000 and 35,000 is Banknifty's highest put and call writing is seen. 33,000 and 34,500 is the next level of highest put and writing. So it's closer to bullish, as you can say. 0.95 and 0.93 support call ratio. Still has not given up, but the futures open interest build up today. What happened was short building. Yesterday it was last Friday it was the short covering, and it was that's why we had a view also bullish, but today it has ended up in short build up after tracking the bulls, right? That's the open interest analysis. Heat map is showing some greenery in the IT side today. Some recovery has happened. Kotak Bank, an exception among the banking stocks. Reliance did not work out today, so it's a mixed bag on the heavyweights of the index. You can see. So financial services did not do well. FMCG, IT, IT and FMCG and auto, they did good. That's what you see from this heat map. Index heavyweights Chippy twins are still struggling in the sideways, struggling to move up the resistance zones that is there clearly visible. Lions did not do well today, but just climbed back with sideways momentum. IT stocks are showing green on both Infi and the TCS. The momentum is now attempting to stay and climb back to the sideways zone, but TCS has slipped on from the major support zone in Romba and fallen from the edge of a parallel channel, long running parallel channel, and it is we cannot say it has managed to, it still remains in the bearish almost in the end. So moving on to Acsc Bank, it has shown some green bullish moves today. It is the rising momentum and sideways. Kodak Bank has performed today as it has been doing for several days, several weeks probably, but no, not able to move further up, but it's simply consolidating in momentum in the sideways zones and a lot of resistance on the upside, but showing some consistency in closing green since several days. So overall, if you see, it was it was a mixed bag. Acsc Bank did somewhat okay. Reliance did not do excess expected. HDFC Fins did not do, and IT stocks did well. I mean, somewhat did well, but they're all having momentum that is still there. So long. So none of the heavyweights have done dramatic moves today, you can say. Industry structure analysis, if you see, IT is closed, so it's a mixed bag here also. Metal has gone 8% down, is the biggest news today, right? So 8% down move, and momentum is bearish, right? And although the medium term is made in the sideways, it's turned bearish on the short term. Otherwise, it was pharma also went down, FMCG also went down, realty also went down. Pharma 1% down today, but mainly the sideways zones in both the lower time frame and the medium time frames both. FMCG is a flat day actually. Reality is also kind of 1% down day. They both, so FMCG maintains the bullish momentum on the sideways, but it has to catch up. So FMCG is showing some bullishness. It's only stock for bullishness there. IT metal, continue to remain in the bearish zones, right? IT and metal continue to be remaining in the bearish zones. One bullish zone is there in the momentum for FMCG, and pharma, realty, and auto is still sideways. So auto, FMCG, pharma probably may be showing some sideways momentum at least, right? But yeah, so sectorial picks are not possible as long as good bullish momentum is seen on all the time frames. Institutional participation visit today, once again FIs are selling nearly 2000 crores, and this buying by the ADIs is not able to catch up with what FIs are doing. So it's a worry, continues to be a worry. Dollar again has cooled off slightly, is consolidating near the 70, 78 below levels. Some intervention may be happening from the RBI side, we do not know. But for some reason, for the last several days, it has been at a peak level. So rupee has weakened to the peak level. There is some cool off that is happening from the dollar index side. You can see that last 2 weeks it has been falling down from after making a multi-year high breakout of dollar index, and momentum also has moved to sideways and dipping down, falling momentum is what you see. So they're not directly correlated, but when the US currency dollar index is cooling off drastically, it will have the impacts in the USD INR currency pair also. Global indices, you can look at the VIX size, since it's on the edge and it has fallen off and almost been near the 30,600 nearby levels. Dow Jones is what you see there. Big bounce up move has happened, but we don't know whether it will sustain this. We'll have to keep a close watch for tomorrow morning. So US markets continue to be bearish, and although it attempted to do a comeback or bounce up kind of move has happened, so that is what the entire thing is. And our market is also depending on now, like if the US markets and the global markets are going bearish, you just can't do anything. It's S&P 500, Nasdaq on the top, all of them are on the edge of the trend line channel, slipping from major multiple very strong supports, and all given up, and now the attempt is to stay there or try to climb back. You have to keep a close watch if it is able to sustain there, or are we going falling big further, breaking the supports at the bottom side. That's what we have to keep a close watch. So that remains a concern, and it has to be seen as the next day. So crude oil is again showing 110 plus levels, and Momentum is rising but consolidating since not trying to go back to 120 levels at least, but yeah, probably it may be hitting there, right? 110 is still just 10 points away from 120 plus all-time high level, so that's another worry. The crude is not cooling off, and it's not just maintaining those levels, but even showing green candles that seems to be making up more. Gold is recovering from a bounce up from the support zone and then trying to climb back to the momentum is in the sideways already climbed. Next resistance from where it had done an all-time high nearly an all-time high breakout earlier is going to that zone again. So momentum is catching up. Or trend is about to cross over to the bullish ones. So yeah, you have to keep a close watch. Markets are crashing and gold is rising, means probably the markets may crash more. If it makes another all-time high or something like that, or it's possible that it's taking a swing high and then meet the resistance and then further fall down. But as of now, gold is showing green back after several days of down move. Two actionables: short side Asian Paints on the long side. It seems the inverted handle, so there's a curving pattern also. Breakout has failed, so this is major resistance, but it will give a good swing till that point at least. It's inverted on the inverted head and shoulder pattern on the weekly, so that trades will be taken on the daily or the long time frames. So Honda is catching up. It's not ready to go down. There are good supports downside, so probably make it to the gap of the USC today, and there is a hammer pattern also that you can see after a so that shows that there is the people ready to buy at the 3,000 kind of level, so it can give some good up move till it faces the major resistance and upside. So low Asian Paints is a long trade, blue pin is a short trade. It is falling in a trendline channel, very clearly bearish on even the median terms and the daily time frames are. Right? So it would give a good down move up at least until this support zone that you are seeing there where the previous swing low is there. So keep your stop loss tight there nearby that levels, 100 points, 150. And that would be the place you have to come out if there is any indication of a consolidation or an up move that is happening there. But otherwise, it's bearish trend, bearish momentum, price action with level trend line channel down move. Right, so looping can give some more on the short side. Asian Paints can give good prospect on the upside. Right, FMC is also performing nowadays. So to wrap up, the cautious bullishness is the view. Mild bullish cautious bullishness is the view because the trend is about to cross over. Looks like to the sideways momentum after recovering from the sideways from the bearish momentum, and the trend and the moment. I'm sorry. The momentum has already recovered from the bearishness on the short-term trend into the sideways, and the trend indicator ADX is almost at the verge of a crossover on the bullish on the short term. Bollinger Bands very close to the moving average. If that close above that, as you said before, could be positive. So there is a possibility that some kind of a move, or at least further crash may not happen since you're at a very crucial side. But having said that, there is also a possibility that all this does not work out, and then we have made another new swing low, and then it could break the previous swing. We have made a new swing high earlier, and we are going to break the previous swing low once again. So it's very much possible, but the thing is, yeah. So the more the number of times you're trying to break down and fails, the more weaker the support becomes. So that's also there to keep that in mind. But as of now, the price pattern, the momentum, and the trend indicators are showing, give me a sense that it may be bouncing up, right? But there is also one negative factor is the major gap resistance there, so also has speaker. So overall, the Qs are not global Qs are not good. Our Qs are not good. Our VA rate hikes happen. US Fed hikes are happening. High inflation, historic high inflation is happening. Fyers are selling. Crude oil is rising every day, and rupee is weakening to the core. All of these are negative news, and war is there on top of this. So volatility is about 23 plus. Uncertainty is there, is evident. You have to be very cautious especially when you trade. So 17,500, 37,500 on the upside, 15,650 and 31,100 on the downside. Could be looked at Nifty and the Banknifty indices. So we just know where to look at the levels. We had seen the levels already. So those levels has to be kept in mind and have to play accordingly, right? And if you are carrying forward to the next day, make sure that you should always have hedge risk defined strategies. right? Even that is very troublesome nowadays when you have V shape and W shape and all that. So yeah, another positive thing is the W shape breakout, that such a potential possibility to happen, right? That also gives me to think that mild bullishness may be there for the next day, right? So hedge risk define strategies, right? Cutting short position size as long as VIX does not cool off, and that's all that we can do, right? That's my view, right? Cautious mild. Oh, this is a mistake. Please make a note of this. Is not cautious mild bearish. Cautious mild bullish is the view. This is a mistake. Sorry about that. So that's my view. If it helps you frame your view for the next day, if you're not subscribed, please subscribe immediate and share it to maximum. We have very few subscriptions. Appreciate your help in this regard. Thanks for watching. Happy trading. Happy learning. Bye.